Hello and welcome to Trading the Trend. My name is James Boyd. Welcome everyone here today. We've got Brent Morrison in the chat. We welcome him. If you notice my voice is a little off, it's because it is. If I actually go off the camera and you don't hear sound, it's because I'm coughing, but I'll be right back. Okay, no, I'm not going to laugh here today. That's not going to be good. Now, just real quick as we get started, remember we do post educational content on X. You can see my handle at James Boyd CS. You can go to at Brent Moore CS. We do post educational content and announcements. Now, also remember that with what we discuss, it's done for example and illustrative purposes only. When we talk about stocks and options, remember that options carry a high level of risk and are not suitable for all investors. And also remember when we do examples, they are going to be done in the paper money account. Even if you're trading real money, still not a bad thing to actually use paper to practice maybe some different products or strategies that you're not used to, okay? I wish I would have had that when we got started. Didn't have that. Now also remember that investing involves risk. That is constant, okay? There's always risk, even though if we don't really identify it, it's there. It's always there. And also remember that including loss of principal. Short options can be assigned at any time up to expiration, regardless of the in the money amount. And also quick reminder, coming this weekend, we're going to be in New York, okay, at the New York Marriott Marquis. That is actually going to be a one-day event. It's called a market drive. We'll also be, for example, in New York, first day technical analysis, second day option strategies, and that's at the same hotel. And then in Chicago, we'll actually also be in the August 15th and 16th, the Renaissance Schaumburg. So that's a two-day format. First day technical analysis, second day option strategies. You can go to schwab.com/event and actually see more information regarding other events throughout the year. Now, just real quick as we get started, I want to kind of give us a reminder of what we're going to discuss. First off, I want to kind of talk about where some of the prices are, okay? Copper, gold, silver, right? Crude oil. Want to kind of bring those up. We'll also bring up the US dollar, which has made a move that we have not seen in 40 years, okay? We'll also bring up the indexes. We'll take a look at where those are. We'll talk about some of the sectors that are leading. And I also want to kind of talk about two industrials and financials that are actually on the cusp of actually breaking out. One of the stocks in industrials, Caterpillar, getting a little push here today. We talked about that yesterday. Did trigger an entry setup from yesterday's class in the example. Now, also just real quick, we will talk about current positions. And I want to kind of talk about some positions where we maybe need to roll the position or maybe even profit take. And I also want to kind of talk about some of the good and bad about options, okay? Now, let's kind of take a quick look here. If we look at, let's say, the indexes, okay? Now, the comment was in the chat, we love trend 3, okay? Trend 3 is simply, okay, price above the 10-day EMA, which is the purpose of that is to see momentum. Second, the price is above the 30-day simple moving average, and the purpose of that is to see trend. Now, what you're now going to notice is when we look at kind of what type of trends do we see, there's a lot of green, okay? Now, never a bad thing if you actually see the VIX in 1, and you see the US dollar in 1, and you see gold in actually a number 5. Now, a quick reminder, if you say, I don't have that, you can go right to my X page. I actually have that listed there, just trend right in the market watch. You right click on the column heading, it give you a description as far as what it actually, the definition of that. Right click, customize. And if I actually just bring this up, right click and say edit formula, you're gonna see a written definition, okay, of really what this really means, okay? Now, the reason why we actually made these trends is you ask 10 people about the trend and you come up with about 8 different answers, okay? So this is trying to take criteria-based definitions and come to what type of trend do we have, okay, at that moment in time. Now, if you take a look at this, let me just send this. If you say, James, I don't have X, but I'll show you why you probably want to be on X. And let me just send that to you right there. Now remember, when we talk about scripts, they're not guaranteed for accuracy or timing. And what you're now going to notice, if I bring that up, send it, there it is. Now, the first thing, if we take a look at this, it's still the NASDAQ that's leading. Second one in there is semiconductors. Not a surprise. The biggest thing that we would say on semiconductors is pretty amazing to see MU hold the rally that I had with the earnings. NVIDIA still holding as well. So we don't really see a big massive retreat from MU after the mammoth run that it had. The SPY, what you're going to notice is it's kind of third, and you're going to see the Dow Jones trading at the session high. I know you hate that. And you're going to see that the one that's lagging, we can see that it's lagging. How do we know it's lagging? Well, because it's red, okay? And it's been red for a while. It's out of the 4 indexes, this one, okay? What you're going to notice is of the 4 indexes, okay, RUT, SPX, Dow, NASDAQ, that is the only one that is in the red. That's why we don't talk about it that much, okay? Now, the one thing I want to kind of point out here is when we look at the sectors just briefly, okay, and kind of want to look and see. Now, without even us looking, we're speculating that probably tech is going to be at the high. We want to also kind of look and see, are there any other areas that might be getting a push or close to breaking out? The reason why we do this is we want to know where we're likely going to see some candidates, okay? Now, the question was asked, how do you find examples? I'm showing you, okay? So if we actually looked at this, we actually take a look at the communications that's up top, trend 3. Remember, the investor is trying to be long positions in trend 3, wondering, speculating, if you will, could that trend continue? We see it call hold, we see a 20, 55-day high, and this is a more recent breakout or crossover, and you're going to see that crossover really just happen in the last day. We cannot say, oh, it's late, too late, okay? It's only crossed over a day ago, and that probably actually tells us that's a potential fresh breakout. Now, I also want to go down to the financials, and I want to look at the industrials. Notice that they have lagged. They have, okay? They have not been as strong as the communications, semis, tech, and base materials, which has been kind of more neutral. If we pull this area up, the one that we want to kind of pay attention to, if we look at, let's say, the IXI, and I cannot say this enough, okay? We have done, I'm going to say, in the hundreds of discussion points on this one candle down, only to see one red candle, only to see the price never breach the moving average support. The moving average stays green. And the very next day it goes back up and creates a tall hold, trade above the high low day, or a call hold, okay? There's so many examples of this today, it's kind of overwhelming, okay, in a good way. Okay, 1 day down. Remember what we said, okay? The shorter the pullback in duration of time, the shallower the pullback is in percentage from the high, the stronger the momentum, okay? Everyone usually talks about, I want a deeper pullback. Not if you're looking to ride the trend, the momentum. You're looking for short, shallow pullbacks, okay? Now, we also talked about conditional orders yesterday. When you look at, let's say, Caterpillar, that is one that breached intraday and then triggered to the upside. Now, if you take a look at this, what you're now going to notice is, so we had an order. We said, look, if we take out yesterday's high, get us in. Now, when you say get us in, get the paper money account in. And what you're going to see is we kind of had this in one of two spots. We said, hey, look, if we go above yesterday's high, get in. Or if we actually come down a little bit, try to get in. Where was that trade placed? Now, if you did your homework assignment and practice that, it's probably filling a spot where you feel like, yeah, that's been a weak part of mine. But the biggest actually thing is, we want to kind of make sure that we get better and better with actually doing that, okay? So the biggest actually thing is here that triggered for the entry. And now what you're going to see is a little push. Now, the one thing I want to kind of say is on Caterpillar, sometimes you get some stocks that lead the sector. So in other words, you can make a list of industrial stocks and ask the question, like, which ones are leading, okay? Now, what I'm going to do just real quick is I'm going to layer on top of this, we're going to go a long call vertical on top. Now, one of the things I said is, like, what's some of the negatives of options, okay? I think a lot of times people always talk about the positive. What's the negative? I'll tell you what the negative is, okay? Well, if you take a look at this, if we went down to, let's say, long verticals or short verticals, if we had a position, example given like Microsoft, there's a capped gain. So if the stock went up to, let's say, $1,000, we don't make up to $1,000. What's the other bad thing about option in terms of this strategy? It doesn't have a delta of 100. In other words, we're making a fraction of that stock movement, okay? And the other thing is they expire. So if we take a look at some of these positions like JP Morgan and say, man, selling puts is the greatest thing since sliced bread. Well, push back on that. We would say, yeah, even if this stock JP Morgan went up to, let's say, $1,000, the most we could make is $470. So why do people sometimes trade stocks? Because they don't want to have an expiration, because they want the dividend, because they want a higher delta, and so on. And sometimes those are key reasons of why someone wants stock maybe with options and not just options, okay? Now, what I'm going to do here, I'm going to go back to the Caterpillar, and then we're going to go to Amazon for just a moment. Now, if you look at Caterpillar, kind of breaching this whole channel. Now, a lot of examples we're going to take a look at here today are going to be channel-based trades, okay? Now, what I'm going to do is I'm going to go to the Trade tab, and what I'm going to do in this case is I'm going to go to the margin account, and what I'm going to do is the position that we have there in that account is the 350, 340, which is at 88% of the maximum gain. Okay, so here's the deal. We don't need to click on this profit loss open to see where we are. We can just, for example, see where that is. We're not looking to exit or roll the position unless it has 50%, okay? Or we're running out of time and we're not there. We always talk about if we can get 80% with more than 20 days, okay? It's at 87. We're going to right click on this, create closing order. We're going to buy it back. Now, when we got in the position, it was a credit. When we get out of the position, it's a debit. Now, what I'm going to do in this case is I'm going to buy it back for 35 cents, giving some money back. Going to go confirm and send and note that commission as well. Going to send the order. Now, what I'm going to do is, let's say the investor said, James, I want to have more of an upside potential. What we're going to do is we're going to go to the August. And you're going to notice that when you look at the Julys, 22 days to expiration. We do not have a lot of time. You got to be careful if you go less than 20 days. It's not really giving time to work per se. I mean, it is, just not a lot. And we're trying to get something where maybe if we buy something 20 to 50 days to expiration, that maybe we could sell it back, if we will, maybe with some time remaining. Don't have to run it to the very end. What we're going to do in this case is we're going to buy the 380, long, buying it. And then what we're going to do is sell the upper strike. So buying the 380 and then buying the 390, okay? Now, remember, in the current market, when markets are hitting brand new highs, verticals are an important strategy. Why? Well, because many investors might want to trade higher price dollar stocks, and they kind of feel like, well, if I buy those shares in terms of stock, I'm not really buying that many shares. Some investors say it's not capital efficient. We could talk about that. But if when you take a look at this, we got a debit. You got a right to buy the shares at 380 plus the debit, 385, confirm send. We get a break even of 385. 500 upside, 500 downside. It also got to add that commission. Now, what we're going to do in this case is we're going to buy that. So we profit took on what we have, and then what we're going to do is enter a new position. If you enter a new position, irregardless if you had it, it's a new position, okay? Send the order. Now, what I want to do, so the comment was, now here's the deal. If we look at this position, is it a bullish position? Answer, yes. How do we know that? Positive delta. If you have positive delta, the stock goes up, okay? Just kind of bring it out again. Stock goes up $1. Theoretically, the options you might have a profit loss of $11. The stock actually goes up, let's say $2. Theoretically, on a model basis, it would probably be up approximately $22. Now, is that guaranteed? No, volatility can kind of change that, right? Bid-ask spread can kind of change that. But it's just kind of the model. It's just saying if the stock goes up $1, approximately how much are the options moving up by? Is it a gain or a loss? And all we're doing is we're just taking the stock move, $1 up, $2 up, $3 up, and we're just timesing it by what the delta is. Times 11, times 11, times 11. And you could do the exact same thing if we went down, minus 11, minus 22, minus 23, and so on, okay? So I like to think about the delta as a conversion factor. We're going from stock movement, okay, to option movement, okay? And that conversion factor is 11. Now, deltas on all option strategies don't stay the same, but on a vertical, that's going to be more likely to stay closer to 11. Where that doesn't become true is when you come closer and closer and closer to expiration. But initially in the short term, it's probably going to be right around 11-ish, okay? And this is more true in shorter movements, up or down. Now, what I want to do is I want to also go back to Amazon, okay? Now, if you look at Amazon, tell me where you see resistance is. Where do you see resistance? Now, a lot of times, resistance is like a 4-letter word. It's like horrible. It's like an electric fence. But a lot of times, as we look at resistance, it's not always negative. Sometimes it can be a positive, okay? And you want to kind of watch and see what is the stock doing as it's going up near resistance. So example given, we've been watching the stock Amazon, and you're going to kind of see that over time we've been really making some higher lows. Yes or no? Okay? Now what you're going to notice is once we start getting into that apex of the triangle, horizontal resistance, what I mean by apex is we're going to get it right here. Now what you're going to notice is if we look at the MACD, it's trying to roll back up. Now if we zoom in and say, okay, what is the moving averages doing? The 10-period moving average has gone green, showing a shift in momentum. What would actually signify maybe a stronger move? Moving average crossover, we're really close. Maybe a hold, it's so far doing that, so far. And if you get that 20-period moving average going green as well. Now, what I'm going to do is I'm going to kind of show an example. Let's say the investor said, you know, James, I want something that has a greater sensitivity to price movement. I don't like this 10 delta stuff. If I get the direction right, I want to be right more. Is there anyone here that actually says, James, that's me? If we go up $1, I don't want to make 10 cents on the dollar. I want to actually be up potentially more. Now, when you actually say that, there's potentially more risk, but the investor might say, I'm okay with that. Now, what I'm going to do is I'm going to go to the trade tab. And what we're going to do is on Amazon, right in that margin account, we're going to do a long synthetic. The long synthetic is just saying, look, we're going to buy a call, a bullish trade. You buy a call, gives you the right to buy the shares. Why would you do that? You're bullish, okay? You pay a debit. You have the right to buy the shares at 215 from now to expiration, plus the debit, and that gives you the break even. Many investors don't like kind of paying $11.75. They might say, could I come on the other side and sell something? Now, what we're going to do in this example is we're going to sell, okay, the 210. Why are we selling the 210? Well, when you typically sell puts, some investors try to really do something with a delta of 30 to 40. Well, if we looked at this, what you're going to notice is we got one at 205, you got another one at, let's say, 210, and so on. So what I'm going to do is I'm going to sell the 210. And what's the risk of selling the put? Well, the risk of selling the put is that if the stock actually goes down, there's unlimited risk down to 0, okay? Now, if you take a look at this, if we sell, let's say, the 210, and then we buy, let's say, the put for, let's say, 170, well, it's going to give us a 552 credit. Now, you can think of this as like a cash secured put, just with a wider long put on the downside. We know that this is really done for buying power reduction. Second, it's also probably done for like just having a max loss built into the trade. So the short put vertical or short wide put vertical has a built-in max loss. Now, if we go down to single order and say first triggers SEQ, and then we click on the ask price, what you're now going to see is it also has a built-in maximum loss, whatever you bought the call for. Now, if we paid $11.70 and then we got a credit of, let's say, $5.52, you're going to see that in this case, it really gives us a debit there of about $6.18. That's going to give us the maximum loss on the trade, $6.18. Now, what I'm going to do is I'm going to analyze the trade, okay? And then what I'm going to do is I'm going to right-click on that line, the short wide put vertical, and then analyze the trade. Now, what this is really going to do in this case is it's going to show, first thing that what we want to see is, we want to see, so what's the schematic, if you will, of the line? Is it kind of like a diagonal line, which would be like a stock? And we got to say that it kind of is, okay? It kind of has like a diagonal line. And so that just tells us that there's a greater sensitivity to price movement. If we get the direction right, you feel like a hero. If you get the direction wrong, you don't feel like a hero. When we also go down to, let's say, the delta here, for one contract, the delta is 81. So if that stock goes up $1, theoretically, $81 net gain-ish, unrealized gain. Stock goes down $1 in the shorter term, down 81-ish dollars, okay? So, and this also has a built-in maximum loss. Now, if we said, well, how much is this going to cost? This is like replicating an 81 shares of stock, but not buying the shares. Now, what are some differences? Well, if we bought 81 shares of stock and that stock is 216 bucks, to get the same thing, I would need to actually outlay 17,495. If I did this trade in the margin, and that's if we bought 81 shares of stock, 216, the stock is $216, okay? If I did this in the margin account and said, well, how much do I need to set aside? Answer, $31.18. If I actually went to the IRA and said, well, what is that in the IRA? The answer is still, we would need to set aside $31.18. So a lot of people like to do this to try to be more capital efficient. The difference is we don't get the dividends. We have an expiration. We have risk of the bid-ask spread, right? Volatility, right? Affecting those options. And I said, but I'll say again, expiration, okay? Now, what I'm going to do is if we look at Amazon and said, if it can breach resistance, okay? What we're now going to see is if we said, if it can break, well, that if we can break might try to get pushed back up to about 232. And what you're now going to see is probably 241. Now, guys and gals, think of this as 81 shares of stock, okay? So if you said, well, wonder if we go up. Well, if we go up from where we are up to 232, it's a $16 move. So if you had shares of stock and you had 81 shares, to figure out how much you would be up, you would just take the stock move, $16, times it by the number of shares. The number of shares, delta, okay? So if we went on this and said, okay, $16 move up, if it went to that target, times 81, if that delta stayed the same, that potential target could actually be profit loss, potential, $12.96. If we said, well, James, I want to set the stop underneath that 209 level, you could also run that calculation as well. Let's use this kind of as a proxy, but I want to kind of bring this up because when we look at these big, massive moves like on Goldman Sachs, okay, and you look at some of these big, massive moves, someone that trades vertical, they feel like, well, yeah, I got it right. But the question was, how much did you get it right by? Okay? Now, if we also go back to, let's say, I want to kind of pull this up. Now, is there any paper money any position where we have Goldman Sachs? The answer is in the margin account, we sold the IRA, okay? So we sold at the resistance. We had one remaining that was not at the target yet. But if you look at the margin account, there is still some remaining. Example given. Yeah, look, we got in the position and the stock went up and the investor so far, in this case, the paper money account is up $165. Now, you got to understand something. This is a almost $33,000 portfolio, $170 on about a $32,600 portfolio. You think that's kind of like chump change, but even though this is like $175, It's really moving the portfolio a half of 1%. 0.01 would be 1%. 0.005 is a half percent. So it doesn't look like it's a lot, but based on the account value before this position was put on, it's a half percent. Okay. Now, what you're now going to see is I'm going to also go back. So let's kind of put this trade example on. This is really a cash secured put with downside protection. Second, it also has a long call as well. Okay. Now, what I'm going to do is I'm going to go confirm and send. And this is in the margin account. Okay. Now I'm not putting a target on it. Okay. I'm just going to try to let it play out, and we're going to watch that price movement. Now, remember, it's Amazon. In the backdrop, it's Goldman Sachs. Just look at this. Let's confirm Amazon. Yes. Amazon. Yep. Okay. Send the order. All right. Now, let's also go back to just real quick a couple. Let's kind of go back to some examples that we have. I want to go back to, let's say, JP Morgan. Okay. So a lot of times when you look at a position, this was kind of more your short put vertical, a little wider. Okay. Now, remember we had the discussion on, Jamie Dimon talked about a high percentage probability of recession, et cetera, et cetera. We kind of talked about that. Now, you have to remember is as long as you trade in the market and or invest, there's always going to be two sides of an opinion. Always. It never ends. Some people just try to say something just to see if they can get a reaction out of you. Okay? So you have to understand that this is what makes the market. Someone thinks it could go up, someone thinks it could go down. Okay? And we're trying to trade the technicals. And if we went back to this chart and say, where was this trade placed? Example, June 16th. We pull this up on the chart, type it in. We want to ask ourselves now, are we trading emotion or are we trading technicals? Now, if we look at June 16th, it was right here. Grade the entry. What would you say? Were we trading emotion or were we trading technicals? Now, when you say technicals, we're kind of looking at something, were the moving averages green? And we have to say that they were. Was there a call hold or tall hold? There was. Okay, at least at the end of the day, we're looking back now. But if you look at where that was, it was kind of also like a stock trying to break resistance. If we missed that entry, if we did, tell me where another reentry was or two after this entry spot. Where was another reentry? Well, if you're asking us that, we would actually say, look, it went down for a day. Did the red candle, we had a red candle. Did the red candle even come down to the middle of the large green candle from the previous day? It's okay to say no. Did the red candle ever breach the moving average? It's okay to say no. The very next day, if that stock actually trades above the high of the day or gold, that is what short-term bullish momentum traders look at to see a potential bounce setup. This could have been another reentry day or an entry day if the investor said, look, I missed this day. If the investor said, well, James, I didn't see that, but I saw JP Morgan gap to the upside, that could be also another entry. So there was really 1, 2, 3. There's 3 entries in 5 days. Now, we cannot say malarkey such as, well, it's so hard to find them. It's so hard to find them. For the last 2 weeks, we've really kind of been just kind of using the Dow Jones as a watch list. And someone might say here, but yeah, it's 30 stocks. You don't get it. You actually don't get it. We're not looking at 30 stocks. We're looking to say, of the 30, which ones are trending? And so how do we know that? Well, what you're going to notice is how many of these Dow stocks are really in an uptrend. So out of the 30 stocks, there's probably 12 of them that are in green, and the rest of them, 18 or so, they're kind of down. So how many Dow stocks are you really looking at? About 12. Okay. No one here is that busy. Nobody. Okay. Now, I say it like this because a lot of times we get kind of twisted around, and I got to create some special watch lists. I got to come up with some custom searches. Look, you can, but sometimes some of the opportunity is right in front of the investor. Okay. Now, if we take a quick look at this, okay, I'm not going to change anything. We talked about American Express yesterday. Notice for the thousandth time, which is nice because you start to see a pattern, we saw the breakout day and then red candle. Is that normal or normal? It's normal, right? That second day tends to be the red candle. That now, if you go back to now, did the red candle even get to the previous day's midsection? It didn't. Did we actually go down to the moving average? We didn't. This is a very short, shallow pullback so far. If we look at today, what you're going to now notice is this is becoming very, very, very close to triggering a brand new bounce setup. So if the investor says, yeah, but I missed it, well, where's the reentry? This is what we're trying to kind of teach you here is the reentry is if you get a breakout day, the second day tends to be a red candle, not always, but tends to be. And then we're looking for the bounce. Now, so far, this is what we call a trigger day, a close higher day. Now, if at the end of the day, if we close above in the last 90 minutes or close there, we could actually see that stock where maybe investors are trying to buy it at the end of the day. If we close right here and the stock gaps up in the morning, though some investors might be trading the gap in the price. And if we kind of looked and said, what type of trend is this? Well, it's a ascending triangle. You go back and really look at this and say, if it were to go up, where might it try to go up to? Now, what you're now going to notice is if we take a look at this, kind of some of that old horizontal support was right around about 304 and change. And we're now breaking up inside the channel. Now, Stay Gold says, what if after the breakout we have 2 red days? Okay, so let's just kind of make this crystal clear. Okay, so if one red candle, okay, and then green candle, and let's say it's Cahold, we're saying in that case it's a stronger momentum. It didn't have to go down as long. Okay, if 2 red candles and then green, and let's say there's a Cahold or a CHG, okay, this is still strong momentum. Okay, so if we kind of had to grade them and said which one is stronger, 1 red candle or 2 red candles, I think many investors would say, James, if you only pull down for a day, only to see the stock go up again, stronger momentum. If we go down for 2 red candles, and let's say those red candles are just like doji days, spinning tops, okay, not even bearish engulfing, it's still strong momentum. Now, if 3 red candles and then green, Cahold, CHG, now it's going to be still momentum, but not as strong, okay, as the first 2. Now, technicians that have experience, they're looking for stocks that are probably having a pattern of pulling back less than 3 days. Why? Because those are the stocks that are probably holding the moving averages. Namely, the shorter term moving average, the 10-day exponential, the 10-day whole, anything that would be a shorter term moving average. So if you go back and look at a stock example given and say, what's the pattern that we've actually seen with Microsoft? Well, the pattern is we go down for a day, fires back up. Go down for a day, fires back up. Goes down for a day from the open and fires back up. Down 1, 1, 2. This is a classic example, right? You get 2 red candles and someone thinks it's massively bearish. Those red candles are pretty much at the same price level. If you said, well, James, we went down for 3 days, is that horrible? It's not, okay? It barely went, it's just like sideways. Red candles, just like green candles, they're not all the same. These red candles are just saying we closed lower than we opened, but they're like barely down. I cannot tell you the number of times when we see red candles, it's like our minds turn to really fear. So the biggest actually thing is when we take a look at this, we got to put the red candles in context. And I think this is really important that people get spooked out of upward trends. And all of a sudden they're like, I had it and I just saw a red candle and then I ran and sold it only to sit in cash because some guy talked to me about how the news in the marketplace is bad, whatever. Look, at the end of the day, the goal is for some investors, you're really trying to get to a point where you're trying to actually think for yourself. Okay? You're trying to take your experience and saying what has worked for me or what has not worked for me. Now, to get to that point, you want to at least say, I need to paper trade a lot and find out over time what works for you. What strategies do you like? And you're entitled to that. Okay? And what you're now going to notice is if we actually see this, one day, these come this patterns over and over and over and over. I mean, how many of those did we actually see? The answer is a lot. You think someone was actually someone was watching that? Now, remember, you could also go back and kind of say, what stocks kind of exhibit that pattern? How would we really, if we ran a search and said, hey, James, how would I know maybe like a current stock that's doing that? The answer is simple. Any stock that's above a 10-day exponential. Why exponential versus whole? The whole is more of a weighted moving average. It's going to be closer to the current stock price. The exponential is still fast, but it's not going to be as fast as a whole moving average. So if someone said, look, I'm going to look for a stock price above $40, I'm going to look for a volume of, let's say, million plus on average, I'm looking for some stocks really above the 10-period moving average. And, what you're really seeing with these colored candles is the investors trying to be in stocks above the shorter term moving average. Okay? And again, if we said, what's the difference between a whole moving average and an exponential? The whole moving average is just going to be even closer to the current price. The exponential is going to lag a little bit more, but not massively. It's going to be a little bit more forgiving, but the moral of the story is the same. It's a gauge for momentum. And if we get these orange colored candles for just a day, only to fire green again, 2 days or 3 days, but still stay above the moving average. And then what you're going to see is it was pretty much neutral. And it's been like 99 days in a row of green. So my point in bringing this up in answer to the question is, I think sometimes we make this too hard. Okay? And we got to learn to think for ourselves and just realize if we take risk today, it's going to be the same as taking a risk a month ago. Okay? $200 risk today, $200 a risk a month ago. Okay? The investor is in the business of taking risk to try to see if the trend could continue. Okay? Now, let's go back to just real quick, the quick question on the Amazon. And if we bring up the Amazon, the question was, what was the Amazon trade on the put side? Okay. So on that, what you see is we sold the put, okay, the 210. And what you're seeing is we're trying to buy the 185. That's what it was. Okay. Now, what you're going to see in this case, so it's the 185. Okay. And just to be clear, that's for the August 15, okay, expiration. Second question, okay? If we go back and say, could you share this with us? Now, here's the thing. I don't like it, okay, when a chart really shows so many different things. I like a clean chart. I've seen friends of mine that have every indicator under the sun, and it's just hard for me to see what's going on. I like to think about this chart package, we call it the package, just the package of charts. Think of it as like a situation, okay? The first chart is really kind of a good gauge for momentum and trend, and it has the color shading, it has the color change of the moving averages, and so on. When you look at the second chart this is really looking at the day's highs. Think of that as breaking resistance and so on. That orange dotted line, right click, that's actually a 10-day high. So if we're hitting a 10-day high, that in the shorter term is actually something that's actually might be trying to reverse. The blue line, take this back. You're going to see that if you right click on it, 20-day high. And if you look at that line right there, 55-day high. The 20 and the 55 correlate back to what we saw in the market watch. Okay. And then last but not least, if you start going through there, this is actually now taking into context where the highs were, where were they hit, and also visually seeing over time the volatility. When the stock pulled back, does it tend to pull back more or tend to go back down to days lows, like even farther down? The reason why I want to know that is, if you have a stock that pulls back to, let's say, the 8-day low a lot of times, and you said that's where I set my stop, then be prepared, then probably getting stopped out more frequently, okay? The investor might say, I don't want to get stopped out prematurely. I'm going to try to give it a little bit more to that red line, and that red line is really at the 10-day low, okay? Now, the comment was really from, can we set up a scan prices above the 10-day moving average? If we go back to the market watch, right click, customize, okay? I'm going to just bring up, let's see if I can, 10. I don't have 10 right here, but if you actually said, the answer is you can, okay? This is just a paper money account. I don't have it there. Let me try to check one more place. But I'm not sure. So there is a market watch, okay? Let me see if this will actually do it. Let me see. Okay, there it is, okay? So this right here, if you actually said, hey, James, how would I actually know which stocks were above a 10-day exponential? Okay, so let's right click on this, edit formula. So all this is just saying is we're looking for the price to be above the 10, okay? So what we're looking for. Now you can put simple moving average, exponential, whole, whatever you want. And what you're going to see is the green background number one is actually saying it's meeting the criteria currently, check. Script's not guaranteed for accuracy or timing. And the red background is really, it's not meeting the criteria. Now, if I share this with you and just put it out there, you're going to see that I'll put that right in the chat, okay? Now, there you go. So now here's the thing. This is kind of like, so if you look at, let's say, a Dow Jones list, or you look at the NASDAQ 100, et cetera, the more stocks that are above a 10-day moving average, the stronger the momentum in the market, okay, at that point in time. Now, I want to kind of also fast fire on a couple other stocks. I just want to get to those questions. I want to also kind of bring up, we did see actually copper push to the upside, okay? And what you're now going to notice is that was kind of one that was, maybe some investors said, James, I saw that coming, okay? We also, for example, if you look at this, we're seeing we're going to keep an eye on that new asset class as of a couple years ago. And could we see coin and maybe hood? Now notice this again, 1 day down. Think of the questions we ask ourselves, only to fire back again. Hood, what you're now going to notice is kind of a trigger day, okay? Those stocks are correlated to that new asset class we actually talked about. We are also going to see, if you take a look at this, Palantir did actually make a brand new high. Josh, if you actually correlate Palantir to that new asset class, there's been some times where Palantir has had a 90% correlation to that new asset class. Palantir, as we talked about yesterday, is AI. You need to think about, well, if they're AI, do people that buy AI build a portfolio of Pepsi stock, Coca-Cola, General Mills, right? Campbell's Soup? If someone's buying AI stocks, there's a pretty good chance that they're probably going to be focused on technology. Now, remember, with correlation, it changes over time. But when we look at Palantir, let's say, also looking at that new asset class, as of a couple years ago, that correlation sometimes has been north above 80. Anything above 70 is pretty strong correlation. Above 90 for longer, strong correlation. What does this probably tell us? People that are buying AI stocks are probably buying other things that have a correlation to that. Correlation to stocks to the new asset class? Are we saying that they're not buying Coca-Cola or Altria or Campbell Soup? We're not saying that, but you got to think about if someone's buying AI stocks, are they really buying those other ones that are so low beta dividend paying stocks if they're buying AI stocks as a focus? Got to ask ourselves that question. Now, I'm out of my time here today. I want to give us a quick reminder that if you go to, just real quick, our YouTube page, Trader Talk Schwab Coaching Webcast, you can actually subscribe for free. Quick reminder that you can also go to my page on X, and what you're now going to see is, if you take a look at this, I do post throughout the day, okay? So take a look at those. Those are not recommendations. Those are examples of what we discuss. In terms of practicing, they're not recommendations. And lastly, if you said, where can I see a playlist of what was also talked about historically, there's the playlist, okay? Now, remember with what we discussed, it was done for example, illustrative purposes only. Stay tuned for our next webcast coming up at the top of the hour. And thanks to Brent and all of you. Remember with what we discussed, it was done for example and illustrative purposes only. And with that said, have a great day. Take care. Bye-bye.